Traders from whichever side of the country, world you're watching me from, welcome to today's morning market call. My name is Ian Joseph, market analyst at HF. Disclaimer before we do begin: the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry, I'm here to help you look at the markets the right way. Roland, hello and welcome. Thank you for being the first one to join the show. We live. Yes, indeed, we live. Gracie, Dero, welcome to the morning market call. I would want to start by looking at the promotions that we currently have. When you go over to the bonuses and promotions segment on our website, we do have the PS, the resistance, the score, and draw, whereby you have an opportunity to Yes, indeed, we do have an opportunity for you, the traders. You have an opportunity to take home a brand new BMW 4 Series, whereby you're going to redeem 25 points for one ticket for the BMW. Not only that, we are going to have a UK Premier League trip paid for two. All expenses, flights, accommodations, tickets, redeem 20 points. Tickets. 4 people are going to be watching from a 55-inch TV. Redeem 10 points for a single ticket. 20 winners are going to be given official EPL jerseys. You redeem 5 points for a single ticket, and 60 winners are going to be credited $200 into their accounts, whereby you're going to redeem 2 points for a single ticket. We are going to have monthly lucky draws in the next 10 days, 14 hours, whereby we are going to give away quite a decent amount of money. How do you join? You go over to your HF login under the promotions, join the score and draw, trade and earn points, and allocate them across different draws for exclusive prizes. Now, we do have our Rift Valley Pit Stop Tour. Currently, it's about to resume. This is going to be part 2. If you are going to be in Kericho on the 25th and 26th of November, we will be at the Sunshine Hotel from 2 p.m. to 4 p.m. Click register now, book your seat as early. We are going to have limited slots available. Eldoret, we are coming for you next, whereby 27th and 28th of November at the KVDA Auditorium, and we are going to conclude the Rift Valley Pit Stop Tour with Kitale on the 29th and 30th of November at the Aturu Khan. I do have physical classes here at the Oval of Ring Road, 5th floor, which is going to commence the next cohort. It's going to be on 24th of November till 28th of November. It's going to be a complete course to enable you from beginner to consistently finding opportunities in the marketplace in less than 5 trading days. If you are not available physically, we do have the webinars, whereby if you go to the webinars on our page, I do have the final session today at exactly 7 p.m. GMT +3, whereby it's going to be the next 8 hours, 53 minutes and counting, whereby the final session is going to be Think Like a Trader, Mastering Psychology, which is the most important thing for us as traders, how we approach the markets. Mike's team, welcome to the stream. Once again, click on register now, book your slot. We usually have limited seats available. Going over to the morning market call, starting with earnings. Yesterday, we had the tech giant, Nvidia, releasing its earnings. It actually came out much better than anticipated, whereby we did see that tech giant post quite an interesting amount of profits over the past year and the quarter also, whereby we will look at the data. Now, this is the official page for Nvidia. Now, Nvidia did announce their financial results for the third quarter. If I can zoom in my screen slightly, for the fiscal year up to 2026, whereby revenue was up $57 billion, which is 22% from quarter 2 and 62% from 1 year ago. Now, the data center accounted for a majority of the revenue, whereby 51.2 billion came from just the data centers, and this is up 25% from the second quarter of this year and 66% from 1 year ago. Now, looking at this information, Blackwell charts, the sales of Blackwell is off the charts, and cloud GPUs are currently sold out, say the CEO Jensen Huang of Nvidia. Compute demand keeps accelerating and compounding across training and inference, each growing exponentially. We have entered the virtuous cycle of AI. The AI ecosystem is currently scaling very fast with more new foundations, model makers, more AI startups across more industries and in more countries. AI is going everywhere, doing everything all at once. During the first 9 months of the fiscal year of 2026, Nvidia returned $37 billion to shareholders in the form of shares repurchased and cash dividends. As of the end of the third quarter, the company had $62.2 billion remaining under its share repurchase authorization. Now, looking at the information, we do anticipate the near future Nvidia to continue improving, whereby there are statistics of actually the fiscal year into 2026, they are anticipating up to $66 billion in revenue, plus or minus 2. This is the upcoming year for 2026. Now, looking at the margins expected to be 74.8 and 75% respectively. Quite interesting. The third quarter revenue was a record $51.2 billion, which is up 25% from the previous quarter and up 66% from a year ago. Now, Blackwell achieved the highest performance and best overall efficiencies in the semi-analysis interference max benchmark. Now, this is something quite interesting. I'm a fan favorite of gaming. I can't wait for GTA 6 to be launched next year. Now, how is this going to impact? Because when you look at Nvidia, 30% of their revenue comes from gaming, and their top of the line currently GPU is the RTX 5090, which is the most powerful GPU, and it runs on the Blackwell architecture. Currently, at the moment, we are seeing these products fetch a decent amount of price, meaning investors, consumers are looking at it at a positive scale. Timothy Kiara, welcome to the stream. We have a question from Limo. Is it possible in the near future to include live YouTube streams of the market call? Yes, indeed. It shall come very, very soon. Now, once again, going back to Nvidia, they do have future plans that they are looking into, whereby they relieve plans to accelerate 7 new supercomputers, including with Oracle, which is a big hedge fund, to build the US Department of Energy's latest AI supercomputer, Solstice, featuring 100,000 Nvidia Blackwell GPUs. Wow, quite interesting. Plus another system, Equinox, featuring 10,000 Nvidia Blackwell GPUs currently at the moment. And we are seeing these GPUs being sold out at the moment. There is a very large demand for these GPUs while the supply is limited. Now, this means that Nvidia is going to fetch a higher price for the current supply of the GPUs that they do have. Not only this, we have seen the data centers actually post more profits compared to last year. This is almost a 66% growth compared to a year earlier. Now, going back to the economic calendar, yesterday we had the FOMC minutes, and we're going to look at this information. Quite interesting. Now, this is a minute of the recent meeting that they did have, which occurred on the 28th and 29th of October last month. Now, when we look at the information, it's going to give us a deeper insight onto what happened. We usually have the developments in the financial markets and open market operations, whereby the meetings usually start with where we've come from. Where are we currently at the moment? For me as a trader, and also for you as a trader, you would want to start paying attention to staff review. This is whereby it gets interesting, of the economic situation. Now, where have we been and where could we most likely head to? Now, looking at the financial situation, they do anticipate inflation to continue being to the upper side, and I would want to look at the outlook. One of the main mandates of a central bank is to offer forward guidance, whereby they tell the investors, institutions, the country at large, where do we anticipate the economy heading to in the near future? Do they anticipate the economy being on the upper side? This means it's going to be positive for the dollar. Or do we anticipate the economy to shrink in the near future, which is anticipated to be weaker? Now, relative to the forecast prepared for September, real GDP was projected, keyword here is projected, to be modestly stronger on balance through 2028, reflecting stronger expected potential output growth and greater projected support from financial conditions. Now, GDP growth after 2025 was expected to remain above potential up until 2028 as the drag from higher tariffs warned, with financial conditions becoming a tailwind for spending. As a result, the unemployment rate was expected to decline. Keyword here is unemployment is expected to decline gradually after this year before flattening out at a level slightly below the staff's estimate of the natural rate of unemployment. Now, looking at inflation, usually when the central banks come down to discuss of monetary policy, the first thing they usually look at is employment data, which is quite interesting because later on today we are going to look at NFP numbers for September. They look at how people are being employed in the particular economy. Then the second question they are going to ask themselves is, where is inflation currently at the moment? Now, going over on the document here, participants observed that overall inflation had moved up since earlier in the year and remained somewhat above the committee's 2% longer run goal. Now, the committee noted that core inflation had remained elevated, quite interesting, as disinflation in housing prices had been more than offset by hard goods inflation. Now, we are looking at employment heading in the right direction, but we are seeing inflation still somewhat elevated. We did see the inflation numbers last month come out slightly higher than anticipated. Quite interesting, noting how that affected the policy of the Fed Reserve. Now, with this document, the most important thing that we want to look into is where they are going to set interest rates. Now, the committee policy actions, this is the most important part of this document. In their discussions, as a result of everything, they have looked at where they've come from, they have looked at where they are. Now, the most important thing is the near future that they are looking into. What are they going to do? Now, they also agree that job gains had slowed this year and that unemployment rate had edged up. In support of the committee's goals and in light of the sheet of balance of risk, almost all members, keyword there is almost all members, decided to lower the target range for the federal funds rate by 25 basis points, which came back down to 375 to 400 basis points. Now, 2 members voted against that decision. One of the members preferred to lower the target range by at least another 25 basis points, while the other member preferred to leave the target range unchanged. Almost all members agreed to conclude the reduction of the committee's securities holding on December 1st. This is something that has been occurring ever since 2022, whereby the Fed Reserve has been reducing the balance sheet. Quite interestingly, all members agreed that the post-meeting statement should affirm their strong commitment to both supporting maximum employment and to returning inflation to the committee's 2% objective. After this document was released, the statistic on the FedWatch tool jumped up crazy, which in the next meeting is supposed to be in the next 20 days and counting currently at the moment, which is going to be the final meeting of the FOMC as it stands. Now, looking at the statistics, 1 month ago, the probabilities was 0.6% of having interest rates being held where it is currently at the moment at 375 to 400 basis points. As it stands right now, the probabilities have jumped up to 70.4% of having interest rates being held currently at the moment. Now, at the same time, there's only a 29.6% chance that we will see interest rates being taken down in the next FOMC meeting. This means that I'm anticipating a stronger dollar. Whenever the central bank is anticipated to hold interest rates where it is currently at the moment, it means the dollar is anticipated to be stronger because of more capital inflows into the country. We have looked at going over to the cryptocurrency currently at the moment. Bitcoin is down 9.51%. It is still trading at $91,963 a coin. Ethereum is down 11%, currently trading at $3,028 a coin, and XRP down 10.74%, which is a good time for me to talk about the Shield 500 account. You have an opportunity to claim your Shield when you open your account within the first 10 days. And I would want to look at this video.
Introducing the HFM Shield 500 account, a revolutionary new account specifically for new traders. Within your first 25 days, trade with a peace of mind where up to $500 in losses are fully covered as tradable funds. It is your chance to learn, practice, and grow with confidence. Ready to kickstart your trading journey? Sign up today and deposit within the first 10 days to get full access to this exclusive offer. Click below to get started, only with HFM.
Only with HFM, whereby you do have an opportunity to open the Shield 500 account. Whatever losses you're doing within the first 25 trading days, we are going to cover you up to $500 in tradable funds. Now, maximum protection, once again, is 500 USD. You can trade all the markets. Maximum leverage is going to be 1:400. No commissions available on all platforms. Click on register now to join the Shield 500 promotion. I would want to switch gears onto the chart, starting with gold. God's money. Now, yesterday we were looking at this scenario, and I do look at these probabilities consistently, and this was a setup that we were looking at yesterday, even before, I do believe during the morning market call, whereby we were anticipating prices to come back into the Fibonacci level, the golden retracement level on the Fib, whereby prices tapped in between the 50 and 61.8% region, and we saw bears coming into the markets quite anticipated, whereby if the Fed Reserve were going to hold on to interest rates, we did anticipate a stronger dollar. Prices did move quite aggressively to the upper side. During Asian session today, we did see some signs of buyers coming into the market, but they were quickly overpowered with sellers, bears driving the markets down. Breaking yesterday's relatively equals. Currently, at the moment, we are having candlesticks print side by side. Now, once again, we do anticipate NFP numbers coming out today. If I can look at the economic calendar here, we do have NFP coming out in the next 6 hours, 11 minutes, and the highlight is going to be the non-farm payrolls for September. Yes, people could argue that this is lagging data. We are looking at data from September, but this is a guide that we didn't see, and now it is going to be presented that me as a trader and you as a trader also will want to pay attention, because it's going to bring volatility in the markets. If there's going to be volatility in the markets, then as a trader, I will want to participate in that volatility. We were looking at a previous number of 22,000 jobs. The forecast currently at the moment is 50,000, which is better than anticipated. And we are going to do this live on Instagram, whereby we are going to stream the live analysis on HFM Kenya today at exactly 4:30, which is going to be in the next 6 hours, 10 minutes and counting, whereby we'll look at this information as it unravels. How will the markets play out? What does this mean for me as a trader? It's going to come out once again, NFP. Today at exactly 4:30, we are going to be live on Instagram. And I'll be joined with my brother from South Africa, Mr. Letu Lushaba, whereby we shall be talking about this piece of vital information. We have looked at the federal minutes that has just come out recently towards the end of yesterday. The Fed Reserve look at employment numbers. If the biggest Forex participant is looking at employment numbers, for me as a retail trader, I would also want to look at the employment numbers, because this is going to affect what investors are going to do in the near future. I do anticipate gold prices to continue moving further to the downside, potentially breaking below $4,000 an ounce. Quite interesting. That will be a very interesting region of price that I'll be paying close attention to, around the $4,000 an ounce, which is somewhere around this region, which correlates with the lows that was created a while back on 18th of November. Now, looking at it from where we are currently at the moment, from current price action to 4,000, this is less than 640 pips away, which gold can do this in a very short amount of time. Now, I do have over 308 assets on my end here. I would want you to engage with me. Which are some of the assets that you would want me to look into? Do you want me to look at GPUSD? Do you want me to look at Nvidia? Put it in the chat section. Give me some love. Give me some fire. I'll be more motivated to do this. Now, looking at silver, whereby silver once again has been breaking character. With prices break the most region of support. Prices was making higher highs, higher lows, higher highs, higher lows, but we had bears coming into the market, and this was a discussion that we had the entire of last week, whereby could we see silver in a short squeeze currently at the moment. Stephen Bogo, thank you so much for the love and the fire in the chat section. Kindly, I would like more of that. Now, looking at silver, we did talk about this last week, whereby silver futures prices was trading below the current spot prices, which is something unusual in the markets. Whenever spot prices are trading above the futures, it means that there is an imbalance between supply and demand, in the sense that we are having more demand for that asset compared to the supply. Now, this drives people who are selling to cover their losses, and prices move further to the upper side. Now, it reached a point whereby silver made an all-time high. It was just shy of $55 an ounce, but we saw massive sellers coming into the markets. Now, if I will pull a Fibonacci from this high, recent high to this most recent low, we did see prices yesterday tap into the golden retracement region. The Fibonacci is a very beautiful tool, one of the most blessed tools we have been given as traders, whereby prices came back, retest into the golden ratio, which is in between 50 and 61.8. And immediately we had sellers coming into the markets. Now, this was quite interesting. Looking at today, we anticipate NFP. We do anticipate NFP numbers coming out positive as per the forecast. The previous number was 22,000. We are looking at 50,000. If the number comes out greater than 50,000, I do anticipate prices to continue moving further to the downside. Potentially silver prices taking out the lows that was at 49.369. Beautiful number. I like that number. I'm going to look at GBP USD. This was a scenario we were looking at yesterday in the session. We did analyze this trade live on TikTok. If you're following us on HFM Kenya on TikTok, we did take this trade live yesterday. It was a live analysis whereby we also identified a swing high and a swing low, and coupled with the fundamental analysis. This is the strategies that we usually do share with you, the clients, over in our sessions, whereby we talk about various types of strategies. And yesterday we did identify for almost 200 hours, if I was not wrong. Yes, almost 200 hours, GBP USD was consolidating about the 1.31440 region. Now, currently at the moment, we were looking at this price as an impulse and a correction, whereby prices made a lower low. This could be a potential lower high, and prices were poised to move further to the downside to make new lower lows. Now, looking at price action currently at the moment, the 200 period moving average went above the 50 period. The 50 period is well above price action, signaling that sellers are in control over these markets. Now, we did look at GBP numbers yesterday, whereby the data yesterday actually got negative compared to the forecast, and we were looking at potentially the inflation numbers yesterday came in lower than anticipated, whereby the previous number was 3.6%, and then the data actually came out at 3.4%. Now, we are looking at the budget deficit next week, whereby there have been leaks already of a 20 to 30 billion pound gap in the budget, meaning investors currently at the moment are offloading positions in the British pound. Hence, prices could continue moving further to the downside. I would consider looking at selling opportunities if prices do break the lows at 1.30360, which is quite an interesting range of amount. An interesting range to look at it. If I can zoom in my charts currently at the moment, ever since Asian session, we have been seeing prices consolidate, trying at the moment to break the highs that was formed during Asia. This was the second candlestick of today's session. If we do close below this range, I would consider also looking at selling opportunities. But on the other hand, if you do have a candlestick that closes well above this range, I would want to have a Fibonacci from this high to the lows that was made during Asian session today, potentially for prices coming into the golden retracement region, which is going to be around the 50 period moving average. If we have signs of prices retracing around this region, I would consider looking at more selling opportunities in the markets. The chef wants us to look at AUD USD. Now, the dollar is anticipated to be stronger in the near future compared to the Aussie. We did look at the most recent was released by the Reserve Bank of Australia. It was early Tuesday, whereby we noted that the Australian government is looking at the overall market conditions of the world, and they're anticipating that there could be more implications of the global economy slowing down. Now, looking at it on the 1 hour time frame, prices has been making lower lows, lower highs, lower lows, lower highs, lower lows, lower high. This could be the most recent lower high that is currently forming. If I can pull a Fibonacci once again from this high to this low, you can see prices retraced perfectly on the 50% and the 61.8 region, which is the golden retracement region. Coupled with that, we do have prices retesting on the 50 period moving average, meaning sellers could still be in control over these markets. I would anticipate prices moving further to the downside, taking out the lows that we have residing around 0.64509 on the Australian dollar against the United States dollar. On the other hand, if prices do break above 61.8, close well above this region, then I would consider waiting for price action to be much more clear. Now, once again, we are going to have NFP in the next 6 hours. It's very important for us to pay attention to the incoming data. I want to give a shout out to Habib from East Africa. Welcome, brother. Glad to see you. Now, moving over to equities, starting with S&P 500. Once again, yesterday, Nvidia released their earnings. After the markets did close, we did see the S&P 500 move to the upside. Ever since that time to where it is currently at the moment, the S&P 500 has gained almost 1.38% of its total value in less than 10 hours of trading. Not only the S&P 500, when you look at the Nasdaq, the Dow Jones Industrial Average, yesterday after the news was released for Nvidia, prices did move 1.91% to the upper side. The Dow Jones Industrial Average was not left behind, whereby also it did gain massively ever since the lows that was created during Asia, gaining almost 1% in less than 11 hours of trading. And this is a ripple effect that we have seen not only in the United States. When we move over to Japan, looking at the Nikkei 225 index, we have seen prices rally to the upper side quite aggressively ever since Nvidia did post better than anticipated earnings, whereby we did see prices make a high of almost 2.68% to the upper side. Limo, I was just about to look at UK 100, and looking at UK 100, the FTSE was not left behind also, whereby we did see some signs of buyers coming into the markets, whereby prices did close almost to the opening price of the daily candle. Currently, at the moment, we are seeing signs of candlesticks print side by side. Looking at the FTSE, remember, we are anticipating the budget release next week from the Chancellor for the British region. This is going to affect prices. Currently, at the moment, as it stands, it is not looking good for the United Kingdom. I do anticipate prices of the FTSE moving further to the downside. But if we move over even to the Australia region, when you look at Australia 200, even Germany 40, before we go over to AUS 200, Germany 40 did have it opening with a gap to the upper side, and all of this is because of one company by the name Nvidia, whereby from the closing price of yesterday to where it is, the Germany 40, the DAX 40 has moved almost 0.83% to the upper side. Australia 200 AUS, let me just have it here. Seems to disappear. Here you are. Now, looking at Australia 200, also in the Australian region, we have seen the AUS 200 move to the upper side ever since Nvidia released its earnings. In less than 9 hours of trading, prices has moved almost 1% to the upper side, all because of one company posting better than anticipated profits. Now, this is going to be quite interesting, noting how investors are going to feel about the AI in the near future. We were thinking, could the AI bubble start to burst as early as now? But Nvidia is actually posting better than anticipated profits. We are actually looking at them investing more. We are looking at more people coming into play here, whereby GPUs are going to be on sale. GTA 6 is going to come. RTX 5090s are going to fetch even a higher price. New technology that's going to be rolled out with the data centers. We are seeing more of this being taken up. Now, there is a concern about AI, which is AI runs on architecture that consumes a lot of electricity. If AI is going to boom as it's booming currently at the moment, we are looking at Oracle purchasing 100,000 chips of the Blackwell architecture. These are GPUs that consume a considerable amount of energy. Now, the question that comes next is, will the energy supply that the world have at the moment be able to sustain the AI boom? Because if you're looking at gaming, if you have been around gaming PCs, if you have been around computing power, they do consume a decent amount of electricity. Even if you have one gaming PC, even if you're using a mobile device to game, usually when you open a game for gaming, let's say, for example, Call of Duty Mobile, you feel your device getting hotter and it drains the battery much quicker. The concern right now is, where will all of this electricity come from? Quite interesting. I would want to look at US oil, whereby we did see oil prices move to the downside quite aggressively towards New York session yesterday. Quite amazing. Now we are anticipating a stronger dollar in the near future as a result of everything that's happening currently at the moment. Looking at the dollar index before we go over to the energy sector, the dollar index is actually moving to the upper side. The entire of yesterday, the dollar index was gaining after we did our morning market call, whereby we did see prices on the 50 period moving average go in between prices. We had the 200 period moving average go well below, and yesterday did gain almost 0.78% of the total value of the US dollar index, meaning the dollar currently at the moment is gaining strength, which means oil prices will move to the downside. Currently, as it stands, if I would pull a Fibonacci from this high to this low, I would anticipate prices coming back slightly to the upper side, which is around the $60 a barrel for a further continuation to the upper side. On the other hand, prices could fail to come into this region and continue the momentum to the downside as a result of everything that's happening at the moment. Now, we are looking at 2026, whereby there are new sanctions of oil imports from Russia into Europe. Before the war, Russia used to supply Europe with almost 40% of its total energy. After Russia invaded Ukraine, it did move. Currently, as it stands, it's less than 20. Come January, it's going to go to less than between 10 and 12%. Now, when this happened, Russia started exporting oil to China and India. But with the new sanctions that the United States has introduced, we do anticipate a shortage in the supply of oil prices in the near future. Now, couple this with seasonality speaking, whereby we are about to enter into winter, oil prices usually see a greater demand because are going to use more energy to heat up their places. But we do anticipate supply and demand to take more of an active role in oil prices in the near future. We will want to rely less on technical analysis, more onto what OPEC is going to do in the future. What are the reserves currently at the moment that the US have in terms of inventory of crude oil? What is going to happen in the Middle East also is going to affect oil prices. What sanctions that are going to take effect come January, how will it affect oil prices also in the world currently as it stands? This means one thing: there's a lot of opportunities for us as traders, a lot of opportunities, which brings me back to the Shield 500 account. You have an opportunity to capitalize on these trades. There are so many probabilities currently playing out at the moment. You have this chance to open a Shield 500 account, deposit between $10 and $500 within the first 10 days of registering. Whatever losses you do in car, it's going to be refunded back to you up to $500 in terms of bonus in trading. You can withdraw the profits. Basically, you're going to be trading real market conditions risk-free. That's going to be it for me. I shall see you on the Instagram live, which is going to be once again at exactly 1630 hours, which is going to be in 4 hours, in 5 hours, 53 minutes and counting, whereby we are going to look at NFP live. I shall see you when you see me.